conversation with the pioneer of technical analysis in India, only on ET Now.
You're watching the FNO show right here on ET Now. But Dr. Narayan, come to you first on the kind of volatile move that we've been seeing in a matter of a few hours. And obviously, this has been triggered by the moves globally. So while Europe has taken a U-turn, we ourselves are looking very weak at this point. But what have you made out of the additions in the 4700 put that has taken place today in heavy volumes?
See, I think there seems to be a consensus in the market that 4800 is some sort of a target area. So I think, which is why we are probably seeing this consistent roll down of the put position. When we were trading at about 52, 53, we saw the 5,000 puts getting added. Now we have moved down to the 5,000 or sub those levels. So I see a strong build-up at 47. Now you'll have to see that the 47 put, 4800 puts are actually trading at significantly high IVs. And if someone is really adding them long at this, let's say this particular juncture and that at the going IVs, then it would have to be concluded that that particular person has some very distinct view or a distinct knowledge that markets are going to go lower. But I would probably think that at an IV of about 30, 35 to 37%, some of them going up as high as 40% plus, there would be a greater inclination for shorting the lower put. So I really wouldn't put it past a lot of shorting happening at the 4700 put, mainly because the index has actually fallen from somewhere around 56 at the start of the month, and we have seen 49. So that's about 700 point cut from the highs, which is pretty much on par for the course for the kind of larger ranges that the Nifty does show whenever there is a large set of reactions. So I think a lot of people must be playing on that. So I would rate 4700 as being a mix of a lot of shorts, fresh shorts, and some amount of protection buying.
All right, Taz. What kind of strategies that one can take, Dr. Narayan, right now, while it is still very risky to take any open position, but maybe hedging ourselves and then trying to take a play on the markets?
See, I think you are having an extremely volatile, setup right now, and clearly this sort of move makes the market move right now, or this particular week or this set of days, as a sort of outlier. Any outlier week or any outlier period actually sets up buying opportunities in the market. So you'll have to go a bit against the grain. Of course, it is a risk, but then, like I always say, if you don't take a risk, where are you going to make money in the market? So if you take a risk, see, we are still early in the month, and we have done, like I said, about 700 points plus for the month already, and this is only the 8th or the 9th of the month. So I would take a little bit of risk and play on the upside, but I would play it with a little bit of caution. So what I'm suggesting here is a bull spread using puts. So this is actually a credit spread. So for this, you long the 5,000 put and say short the 5,200 put. So the pricing is such that you will have an inflow of about 100 points, and which makes that your max loss would also be about 100 points, since you're taking a 200 rupee spread between the two strikes, which is your extent of your, let's say, loss and profitability. So it's a 1:1 trade right now. It's a hedge trade. But I'm trying to bet that, everything is getting overdone here. Okay, Europe is really tanking, but I think the entire malaise is in Europe with sort of never-ending story on their set of problems. So I think it's going to shift away from India. We have seen UBS, Nomura and all those gang, Goldman Sachs, actually send India's rating upward. So I think there will be a shift of all this sort of pain. I think Europe will remain a problem area, but things might settle down in India. So I would like to play on the upside. And I would want to use a credit spread here, play it for a risk, 100 point gain, 100 point loss. That's what I would recommend for the moment.
All right, that's an inflow of 95 odd rupees in terms of premium that will come in with this bull put spread. You can buy a 5,000 put, sell a 5,200 put like Dr. Narayan pointed out. So you're actually playing within that range. But